Good morning, Trinidad and Tobago, and welcome to the Bourse Report. With the announcement of several initiatives to raise revenues and cut back expenditure coming out of the fiscal 2017 national budget, it would seem that the TT dollar investment landscape is set to undergo some changes and adjustments in the near term. This week, we take a look at options available to investors with access to US dollars who may want to look outside of Trinidad and Tobago to generate positive investment returns. An investment-oriented approach, as opposed to a savings approach of simply keeping your US dollars at the bank, may be better suited to achieving your overall investment objectives, particularly given what's going on in the local environment. Of course, tailored and subject to your specific risk and return requirements. So what are some of the investment options available to holders of US dollars? Well, similar to the TT dollar environment, investors can choose from an array of stocks, bonds, and mutual funds, all tailored to different risk profiles for investors. One of the biggest benefits of investing your US dollars, however, is the ability to diversify by geographical region, with many mutual funds and other investment options providing geographical diversification benefits into regions such as Asia, Latin America, Europe, the US, and others. For the conservative investor, there are US dollar money market funds, which offer many of the same benefits as a savings account in US dollars, however offering higher returns. Liquidity and relative safety are some of these such characteristics. For investors willing to tolerate slightly higher risk and with maybe a longer time horizon for investment, US dollar bonds are quite an attractive option. And here, bonds with investment grade or near investment grade quality and 5 to 7 years in terms of maturity can give investors returns currently in the region of 4 to 5% per annum. And of course, for those comfortable investing in stocks, US dollar equities and US dollar equity mutual funds are another viable option to add to your US dollar portfolio. Naturally, investors would ask, does it pay to invest in US dollars? And based on recent performance, it would certainly seem so. While TT dollar equity returns have been reasonably weak in recent times, the US dollar returns have been quite strong. And as we can see, in terms of the Trinidad and Tobago Composite Index measured in US dollar terms, there was a negative return year to date of 3.5%, whereas regions such as the US would have returned around 5.7%, Asia ex-Japan about 12%, and Latin America, surprisingly, has been the star year to date, up 32.3% in US dollar terms. On a longer time horizon, that trend holds intact, and here we can see, for example, over the past 5 years, the last 5 years, the Trinidad and Tobago Composite Index, in terms of total return, would have yielded around 12.8%, whereas a global equity index would have generated around 53% in total returns. US dollar bonds have also provided quite good returns to investors in recent times. In fact, they have been one of the more attractive asset classes for the year and over the past 5 years. And as we take a look, in the last 12 months, emerging market investment grade bonds as an asset class have returned around 9.2%, while a high yield bond index would have returned around 17.4% in total returns. And over a 5-year period, the story is similar, whereby an investment grade bond portfolio would have returned about 31%, and a high-yield bond portfolio would have returned on average around 57%. So how do you begin to construct a portfolio best suited to your needs? Well, of course, it would depend on your particular risk profile. And as we recap the different sort of risk profiles for investors, they are broadly classed into 3 categories: the conservative, moderate, and aggressive investor. And here we can see that the conservative investor is more inclined to allocate a higher percentage of their portfolio to fixed income and money market instruments, whereas the moderate investor would tend to try to strike a balance between equity and fixed income investments. And in our example, the model portfolio is 50% invested in equities and 50% in fixed income. And the aggressive investor, more comfortable with taking risk, will have a higher allocation towards equity investments and a low allocation towards fixed income investments. And as we can see over the past several years, the returns have been reasonable, well, more than reasonable, for the investors of different risk profiles. And just as an example, we looked at a period from 2010 to year-to-date 2016, end of September, and we can see that the conservative portfolio year-to-date, 2016, was up 8%. The moderate portfolio in purple was up 9%, and the aggressive portfolio year-to-date was up around 10%. So what does that translate to in dollar terms? Well, an investment of $100,000 US at the beginning of 2010, as at today's date, would now be worth roughly $140,000 for the conservative portfolio investor, or a total return over the period of around 40.2%. For the aggressive investor, that same $100,000 would be worth around $153,000 US, or a total return of around 52.8%. And the moderate investor, a similar story would unfold, whereby the value of that invested portfolio today would be worth around $156,000 US, or a total return of around 56.1%. How does that compare to leaving your money in a savings account? Well, that same $100,000 would today be worth around just $101,000 US, or a total return of 1%. So regardless of your risk profile, diversification remains key to generating a successful portfolio. And there are some longer-term investment themes that investors would want to keep in mind when building their portfolio, such as targeting positive inflation-adjusted returns, diversifying across asset classes, diversifying across geographic regions, which is especially important when looking at US dollar investments, and lengthening the time of your investment horizon. As always, consult your preferred and trusted investment advisor like Bourse to make better informed decisions to help meet your investment objectives and goals over the long term. That's it for this week's edition. For more information, give us a call at 628-9100, email us at invest@boursefinancial.com, or visit our website at www.bourseinvestment.com. Have yourselves a great investing week. This has been the Bourse Report.